What's going on, friends? Welcome back to another quick property update video. And we're going to run through a lot today in a very short amount of time. So we're going to go through the budget, we're going to go through stamp duty, interest rates, inflation, and just how that will impact homeowners, first-time buyers, and also landlords. So first, let's kick it off with the elephant in the room. The UK is already in a recession, as new data from the BOE indicates. And this has really come because we've now seen the GDP shrink for the second straight quarter. As I'm sure many of you are now aware, as you're probably a lot smarter than myself. And if you look at the official figures from the ONS, it shows that the economy shrank by 0.1% in the 3 months to June. But then the Monetary Policy Committee now believe the economy continued to shrink by 0.1% in the quarter to September. So essentially this would then push Britain into technical recessions defined as 2 straight quarters of an economic decline. So I always say, and I don't mean this to be scaremongering or anything like that, I think we are going to see a lot more pain, and I don't think we're out the woods by any stretch of the imagination. But now let's talk about the big news. So this was big news that came out by the tax cutting chancellor. How will stamp duty cuts help homeowners and first-time buyers? This is actually a really good article with some really useful stuff that I think will help you and keep you guys up to date. So in a bid to kickstart the UK's sluggish economy, Kwasi Kwarteng has unveiled a mini budget, and we'll run through a summary of that in a few moments time, friends, so just stick around for that. Described as the biggest raft of tax cuts in 50 years. Now, having stepped into the job, it wasn't an easy job. The UK faces recession, cost of living crisis, rising interest rates, etc., so they had to act quickly. But have they acted in the right way? That's an interesting question, and something that maybe you guys can let me know in the comments down below, because I have my own thoughts as well. Now, the measures will reduce stamp duty bills for all movers by up to £2,500, with first-time buyers able to potentially access up to £8,750 in relief. So this is a gentleman himself. It will be a big help for people looking to get on the housing ladder, but property finance experts warn they could face obstacles in the form of inadequate housing stock and creeping interest rates. Now, these are really important things, and I know a lot of people give me stick because I keep saying I can't see the property market continuing to grow up. I think there's going to be some level of correction or crash, and I get the whole argument of supply and demand, but overall affordability is more important. I sincerely believe that we have to look at the feasibility. Just because you want something doesn't necessarily mean that you're able to get it. Now, in the last 13 years, we have had ultra low interest rates, as many of you are aware, and all of this year they've been increasing quickly. The stamp duty cut is helpful, but I think the bigger issue is really going to be the ongoing affordability of mortgages. Now, this was said by Adrian Anderson, a director of property finance. So again, I share his sentiments with that. I think affordability is a lot more important. Listen, I understand everyone wants a house, everyone wants to buy a house, but at the end of the day, we've got to look at what's actually practical and what's feasible. And this is essentially what home buyers could potentially save after the recent mini budget. So just have a screenshot of that and I'll just move on. The next part is scary, guys, so just brace yourselves. There is 100 billion worth of mortgages that need to be renewed next year. There are a lot of people who've been paying very cheap rates on their mortgages, even myself included, who are going to have a big surprise. There's a lot of people on fixed rates whose rates are going to be expiring, and the monthly mortgage payments are going to go up significantly. And to add into inflation, the cost of living and stuff, it's going to give people a serious shock. So it's something definitely to be mindful of. And then we also have the issue of renters who could also find themselves struggling too. As Mr. Anderson goes on to say, landlords being charged more after renewing or fixing their rates could potentially pass the difference on to their tenants to cover costs. Now, this again makes logical sense. Most of the time when landlords are getting, let's say, shafted by the government, they tend to pass that on to the tenant. And I'm not saying that's right or wrong. However, again, I still think it comes down to affordability. Just because your rates have gone up and you simply think, I'm going to now charge my tenant more, if they can't afford it, at the end of the day, you're not going to get that money. So again, scary times ahead. Now, just a couple of more things on this particular article. While a cut in stamp duty will leave house buyers better off, Mr. Rolande points out that the mortgage is 25 to 30 year commitment, and says that savings they will make, i.e. on the stamp duty, will be eaten up eventually if rates continue to rise. And I think mortgage rates and inflation are the most sinister things going on at the minute. So it's going to be really scary to look at. Now, quickly, guys, I think it's important we just have a quick run through of the announcement in the Chancellor's mini budget and just some of the key points. So thanks to this article for obviously pointing these out. So the top income rate for 45% of the biggest earners in the country to be scrapped. A cut to stamp duty, meaning the exemption level was immediately doubled from 125k to 250k and from 300k to 425k for first-time buyers. The planned cut of 1p to basic rate income tax brought forward by a year to 2023. There's a cap on bankers' bonuses to be removed. I'm sure you guys will let me know how you feel about that. National insurance to be cut from November. New low tax investment zones with tax breaks for businesses. Planned increase on corporation tax to now be axed and remain at 19%. I think it was going to 24 or 25, I believe. Stricter rules for those on universal credit. They must take active steps to seek more and better paid work. I'm all for that. The introduction of VAT free shopping for overseas visitors, legislation to crack down on strikes forcing trade unions to put pay offers to member votes, and planned increase on alcohol duty to be axed. So that's the main stuff I pulled away from this that I think, just hopefully keep you guys in the loop. I'm sure you guys are much smarter than myself and already probably in the loop anyway. Then we have a little bit more information on the stamp duty, and I just want to show you some infographics, but just very quickly, some of you may, and again, I'm not trying to insult anyone's intelligence here. I'm sure you may know this, but just in case somebody watching doesn't, what is stamp duty and how is it changing? Well, stamp duty is a tax paid by home buyers in England and Northern Ireland based on the value of the property they are buying. The government has announced a permanent change to how the tax works, with obviously now the threshold changing. Now, just very quickly, if anyone's asking, if you're an investor and you're buying a buy-to-let, you will be paying stamp duty. The only way you can avoid stamp duty is if you purchase a property less than £40,000. So first-time buyers in London could potentially save £11,250 under the new stamp duty. And here we can just see a quick infographic. So by all means, if you want to screenshot that, by all means do that. Scotland and Wales, this is important as well. A couple of people asked me on social media. Again, a similar tax is paid in Scotland and Wales, but the rules and thresholds are different. In Scotland, it's called Land and Buildings Transaction Tax. I know that because we purchased a property in Scotland a while ago, and it's not payable on the first 145,000 of a property's value. Meanwhile, in Wales, the fee is called land transaction tax, which is payable on properties above the value of 180k. As the tax is devolved, the Scottish and Welsh governments will receive funding to allocate as they see fit. So hopefully that gives you some clarity on that. Now, let's talk about the UK pound very quickly. The sterling has fallen to a 37-year low as recession looms. This is bonkers. The pound sterling dropped by 2% to a low of $1.1042, the currency's weakest since 1985. Now, I was born literally just after that, and just seeing this and reflecting back on the times where the pound was a strong currency. I was getting €2 for a pound on my first ever holidays abroad, and I'm thinking now, I can only see inflation personally getting a lot worse. So I don't think we're out of the woods just yet. Then we have, will the stamp duty cut push UK house prices up even further? I think this is important to address very quickly. Now, according to the most recent Office of National Statistics figures, ONS, probably easier to say that, the average UK house price jumped 15.5% in 12 months to July 2022, marking the biggest increase in 19 years. Now, the average house price was $292,000 in July, £39,000 higher than it was last year, my friends. Now, I just want to quickly touch on this 19 years. So we have seen house price jump like that, but what we do have to consider now is obviously wages are just not moving in proportion, so there's a huge disparity between that. And then what we just want to quickly look at around the UK property sector is currently we're in a market where demand is obviously outstripping supply, resulting in bidding wars and in turn causing house price rises. So Sarah Coles, a senior personal finance analyst at Hargreaves Lansdown, said stimulating housing market demand could further push up house prices. And this is what I was thinking as well, at least for the short term, as she goes on to say, at a time when the supply of available homes is already tight and mortgage payments are rising due to high interest rates. And she says that stimulating demand without addressing supply problems would risk more buyers chasing the tiny number of properties available, which would therefore push up prices. It's what we saw during the pandemic-inspired stamp duty holiday. However, I don't think we're going to have the same effects because now we're not seeing as cheap borrowing, interest rates are increasing and inflation is going through the roof. And then she then goes on to say the government has successfully resorted to a quick fix, and I definitely think it's a plaster over the solution rather than actually fixing the problem, to increase demand rather than address the structural flaws in the housing market and ensure there is enough supply. So that is a really interesting perspective, and it's one that I actually share. So friends, let me know what you think. If there's anything I missed or there's something that you can add to maybe help the audience, please do let me know in the comments down below.